My name is Tim Johnson and I'm the Managing Director of American UK Tax Solutions. And today I wanted to talk to you a little bit about the tax implications of expatriation. The reason I thought it might be a good topic is that we've been seeing more inquiries from people about wanting to expatriate and to understand what the tax implications would be. So first of all, what do we mean in this context by expatriation? So there are really two situations that we're looking at here. The first one is if you are a US citizen and you give up your US citizenship, and there's a formal process that you need to go through with the, you need to go to the embassy or consulate and formally revoke your citizenship. The second case is a situation where someone is a long-term resident of the United States. Basically, this is somebody who is a green card holder and who holds a green card for at least 8 of the last 15 years and then gives up that green card, gives up their US residency. And in the 8 years, you need to be careful because it includes the year in which you got your green card, so that may be a part of the year, and also the year when you actually give up your green card. So in either of those situations, you need to make sure that you exit the US tax system in a kind of a clean and proper way by filing the correct paperwork. Otherwise, you're going to have you could have ongoing issues with the IRS. That's important. So in terms of sorting out the paperwork, what does this mean? Well, the first thing you're going to need to do is you're going to need to file an income tax return for the year in which you renounce your citizenship or cease to be a long-term resident. Now, that means that you need to file what's called a dual status return, which is a kind of a funny hybrid return where you declare your worldwide income for the part of the year that you were a US citizen or resident, and then you declare your US income for the part of the year in which you were no longer resident in the US. So that's income arising in the United States only. The other thing that you need to do is you need to file a Form 8854 expatriation statement. Now, there are a number of things you're going to have to do on that. The most important one probably is declaring that you are up to date with all of your US tax obligations for the 5 years preceding the year in which you gave up your citizenship. And you're going to do this under penalties of perjury, so you want to make sure that all of those prior year, you've met all of those prior year obligations. So what does that mean? Well, first of all, it means having filed any income tax returns, any employment tax returns if they're relevant, gift tax returns, and information returns. They've all been properly filed. And although not strictly speaking a tax form, I would certainly make sure that you are fully up to date with any FBARs that needed to be filed. Now, the other thing is that you need to make sure that you've paid any tax that was due for those years, including any interest and any penalties. So in that situation, as long as you are not a covered expatriate, and I'll explain what that is later on, then once you file those, you should be finished with the US tax system unless you have income arising in the United States in future years, in which case you most likely. Now, to avoid being a covered expatriate, what do you need to do? Well, the first thing is to file the relevant paperwork. But the second thing is that you are going to need to declare on the Form 8854 your income tax liabilities for each of the preceding 5 years. And what you want is that average US tax liability to be less than $206,000. Now, that's the figure for 2025, sorry. It does go up a little bit each year, but currently $206,000. The third thing is that you want your net worth at the date when you give up your US citizenship to be less than $2 million. And again, you're going to have to declare this on the 8854. You're going to have to include a kind of a mini balance sheet showing your assets and your liabilities at the date of expatriation. So what kind of things do you need to put on for the assets? Well, any amounts you've got in your bank account would obviously need to go in. Any stocks, the value of any stocks and shares that you hold would need to go on there. But also the value of any property that you own. So the most likely one there is going to be your home, probably. And the other thing that you need to include is any pensions that you've got. Now, two main types of pensions. First of all, defined contribution schemes. So we're talking about kind of UK private pensions, but we're also talking about US IRAs or 401ks. They're fairly straightforward because you should be able to get a valuation fairly easily of what they were worth when you expatriated, and you include that. The other ones, which are a little bit more complicated to deal with, are any defined benefit pensions that you have got. So this is basically where your employer has an obligation to pay you a pension at some point in the future, and this is usually going to be dependent upon the number of years that you've worked for the employer, and then your average or your final salary during your period of employment. And you probably won't have a readily available value of this. So what you're going to have to do is you're going to have to look at what the future pension payments that you could expect in the future are, and then basically discount them to what it would be worth to acquire such a pension today. And that means taking into account things like how long it is until you can start to receive those pension payments, how large those pension payments are going to be, and also what your life expectancy would be, and therefore for how many years you could expect to receive those pension payments. So include that. From that, you deduct any liabilities that you've got. In my experience, the most common form of liability is a mortgage on your home, but it could be any other loans or other liabilities that you've got would be included. So ideally, that's going to be less than $2 million to avoid being a covered expatriate. But if you and providing that you're below the $2 million threshold, you're below the $206,000 income tax liability, and you file your forms properly, then you should be out of the US tax system with no further requirements to file US tax returns. If you don't meet those last two tests, then you're a covered expatriate. There's a couple of exceptions. If you were under 18 and a half when you expatriated, or in some cases, if you are a dual citizen from birth, then you may be able to avoid being treated as a covered expatriate. However, if you are a covered expatriate, then or you're going to be a covered expatriate, then you need to consider things very carefully. And I would strongly advise that you get some advice before you make the decision. So what are the consequences? Well, the first one is you may well be subject to an exit tax. Essentially what happens is that you are assumed to dispose of all of your assets at the time when you expatriate at their market value. And you realise any gains on them as though you had sold them. Now, you're allowed to exclude the first $890,000 of any gain, but anything above that is taxed. On top of that, what's called deferred remuneration can also give rise to some nasty tax consequences. Here, the most common thing that we're going to see here are various types of pensions. And you may have, depending on the precise situation, you may have some ongoing US tax filing obligations thereafter. And then the final thing that you need to be very careful about is gifts and inheritances. So if you think you're likely to be making any significant gifts to US citizens or US residents, or indeed you're expecting that any of the beneficiaries of your estate, so people who are going to inherit money from you, are either going to be US citizens or US residents, then again you need to be very careful, because most likely they are going to be subject to 40% tax on anything that they receive from you, and that can obviously be quite onerous on the recipients of those things. So I think you want to fully understand exactly what your situation is going to be, and whether how large any liabilities are going to be, and whether or not you think it's worth your while to go through all of that. Thank you.